We're talking about the ERC credit today, the Employee Retention Tax Credit. And we're talking about the first way in which your business can qualify for this massive credit. And it's called the revenue test or the gross receipts test. And there's a lot of confusion, but it's one of the most black and white ways that we can really dive into whether or not you qualify. But there's some things to really pay attention to. First, we need to identify what is revenue. And the IRS has come out with information related to defining revenue. It's not just the incoming sales, it also includes interest, dividends, and other income that your company has. We also need to decide if it's just your business or whether or not you're part of an aggregate group. How many other businesses do you and your partners have? And lastly, we want to understand which quarters are going to qualify for this. So we review 2020 against 2019, see whether or not any quarter had at least a 50% drop. And then we have to compare 2021 against 2019 as that base year to determine whether or not there's at least a 20% drop in revenue. And this can all be done fairly easily unless there's the one-offs, right? I started my business in 2019 or I started my business in 2020. And so there's additional rules that we can dive into to see whether or not you would qualify. When you work with Leaf Specialty Tax Consultants, we go through and we gather your PNLs, we gather your tax returns, and we compare them in order to put it through a model to determine your qualifying levels. And I get it. We look at all the variables. There's a lot going on. There's other ways to qualify. So if you don't hit the revenue test, we'll dive into the next one. So follow us for part 2. And business owners need help here, so I get it. It's a lot. But that's who we're here to serve. So I look forward to sharing our tax secrets with you. Let's go work together.